Hello, this is Richard Wilson. I'm coming to you this morning from Mumbai, India. I actually just arrived last night. It's just after sunrise here. There's a gateway of India behind me and some of the downtown area here. And I just wanted to talk about something that came up at our event a few weeks ago in New York at Capital Con. Many investment fund managers in the room who are there to raise capital, meet with some of the family offices speaking, and learn how others are attracting investors. I had not heard of the independent sponsor fund model before, and it just made me realize that many of the people who follow our work, our videos, read the books that I write, etc., aren't familiar with all the options available to you when it comes to capital raising or just accessing capital of different types to invest if you don't have money to invest yourselves. At the end of the day, that's why people want to raise capital, obviously. And so I just want to quickly cover a bunch of these different options so that if you hear one of these words or these options that you hadn't really considered before, then perhaps you dig into that and do some research on it, or reach out to us to see how you could learn, the basics of navigating that option. So obviously some easy options that everyone knows are available would be traditional bank debt, credit card debt, using short-term loans either from a community bank, leveraging a asset as collateral, or friends and family and peer capital. They might give you a loan, or they might invest in your project early on. Those are some of the most common sense, obvious forms of raising capital. Another way is to basically have a direct deal model where you're going to say, I don't want an investment fund, I'm not going to have a independent sponsor model, I just want to raise capital deal by deal. This happens a lot in real estate. Somebody says, I have this single family home, or I have this apartment building, and it's a 8-plex. And it's going to take $160,000 down, but you only have $50,000 to put down. Maybe someone else puts down $110,000, and maybe you don't share it 50-50, but he gives you a few percentage points, 5 or 10 percentage points for helping manage the deal, or for finding the deal, or brokerage fee upon closing, etc. And that would just be an example of a deal by deal basis of raising capital, which is very popular and successful, by the way, because it shows transparency to the investor. What is their money going towards? What's the risk of that individual investment, not the risk of the strategy? And it de-risks their perception of how smart you're going to be on allocating their capital, which we'll get to in a minute or two with some of the other options. With the independent sponsor model, what you're saying is, look, we've done deal by deal investments. We're good at it. We have this focus, this strategy, this team, this insight, this angle in the marketplace. Please, soft commit a certain amount of capital to our strategy, and then hard commit as projects come up and as money goes into those investments, whether it's real estate or operating businesses or oil and gas even, that we would take a performance fee or an asset management fee or a brokerage fee or all of the above on those specific investments. Still not blind pool, meaning you know what's going into the investment. You pick and choose the investments that you like. So again, it's not as risky as going into a fund in terms of transparency. But this again is popular and is growing in popularity, and this is the model that people just didn't even know existed in the room at our last event. Another option obviously is raising an investment fund, and importantly, I wanted to talk about a few options you have here. Obviously, you could raise a fund-to-fund, where you invest in different fund managers as a fund-to-fund manager, or an investment consultant of some type, or advisor helping people get into multiple funds, which is a higher macro level of this. But otherwise, some of the basic options would be to have a publicly traded fund that people can get in and out of, or an over-the-counter type fund vehicle, or REIT. Another option would be to have a investment fund where you're privately raising capital and you're not generally soliciting. And then another option would be to register for general solicitation through the SEC if you're based in the United States, and to do public advertising and raise capital for your fund very publicly. All of these options I just mentioned have different regulatory constraints and requirements that you should research and work with a compliance attorney on navigating. I just answered an email by someone who was asking for this type of advice. What licenses do I need to start my own family office? What if I want to raise an investment fund? And it really depends on the situation, the country, the jurisdiction, and how aggressive you want to be regulatory wise. But the point of this video is just to make sure we cover these different structures: having a fund, independent sponsor model, a fund to fund, having direct deal access versus raising capital from friends and family. as the fee levels and the risk levels and the amount of legal regulatory paperwork and navigation really scale up as you go from direct deals to sponsor models to having your own investment fund. There really is a lot more upfront legal work and paperwork and just considerations when you're acting as a fiduciary of someone else's capital and they're not sure what real estate buildings or what operating businesses the capital might go into, but they've invested in your fund. It's a lot of responsibility, and it's another level of professionalism and asset management best practices must be used to handle all that correctly so you don't get in trouble and lose the trust of your investors. So this is Richard Wilson. I know this video is very basic for those of you that are very well versed in the industry, but I just thought it'd be a disservice if we didn't cover some of the investment structure options and capital raising options out there for those looking to get more investments closed. Please check out Family Office Club at familyoffices.com when you have a minute, and I'll see you in the next video.